McDonald's to the moon! Welcome back to Investing with Daren. Just like how when we think of a healthy diet, we try to have a balance of grains, vegetables, meat, fruits. For investors, we also need to have the right mix of our investment allocation in our portfolio that meets everyone's needs. What's right for Boon Tee, what's right for me, what's right for you is different. So today, I have my friend Boon Tee here to talk about portfolio allocation. Hello. Boon Tee, tell the audience about yourself.
Hi, my name is Boon Tee. I'm from Malaysia. I've been working in Malaysia for a few years, Hong Kong for 1 year, and now since 2013 already live in Singapore. So I'm father of two, and I work in financial services.
Nice. One question that I've asked some of my interview guests is to rate your own financial literacy. From 1, you are a total noob, to 10, you are the Oracle of Omaha's boss.
I will rate myself at about, let's say, 5 to 6 because I work in financial services, so I think I'm slightly above average. But you know, with all these investment management or financial services, there's so much to learn, right? So I think I'm just slightly above average.
I think one thing that helped, you also have a YouTube channel and Telegram group dedicated to investing.
Yeah.
Can you tell us a bit more about that?
Yeah, I have a YouTube channel. It's a very small channel. I only started it like late of last year. I use it mainly to share my thoughts on investment topics, and also sometimes I do like investment thesis on companies. So I think that's, you know, when I do some research, I think it's not just for myself. I can actually share it with friends. So I think that's a very helpful avenue for me to share my thoughts and hope that we all can learn from each other.
It's kind of like how some people, they write a diary, but having a YouTube channel, talking about your investing thoughts, it's almost like a digital diary that others can read.
Mm-hmm.
You see it that way?
Yes, I think that's true because, you know, usually when we think about some things, right, whether it's investment or not, sometimes our thought process is not very structured. So, you know, when I document it using a YouTube, I think that's very good idea because I can share it, and maybe, let's say 3 years, 5 years down the road, I can even watch my own videos and see what I have been thinking like some time ago.
And look back at that noob and say, ah, cringe!
That's true, that's true.
You know, on that point, another benefit of me also having this YouTube channel, like Boon Tee, is that we're both parents. My dad's no longer around, and I wish I knew a little bit more about him. Sometimes in our youth, we waste it, we don't truly understand our parents. And 10, 20 years from now, our kids can watch YouTube and get a sense of how silly, how funny, how lame we are, all the dad jokes that we have, and just connect with your own parents. So I think that's one small benefit. Like everything we do here adds a timelessness to it. Yep. Maybe aliens from another solar system will discover us millions of years from now and watch this and say, huh, pretty good advice. I should buy some 10-cent stock. So, Boon Tee, we're going to talk about investment allocation. How has your allocation evolved over the years?
So I think for my investment, it's not really like very structured since the beginning because let's say since I started working in 2009, not really focusing a lot. It's just mainly like, okay, I have some saving, sometimes I buy some stocks and so on. Then between 2013 and 2017, that time was really just focusing on saving to buy a house. Then I think 2017, after I bought my house and I have really like spare cash, that's when I really started all into my investment portfolio or equity portfolio.
And equity will be stocks.
Yes.
And can you tell us like where do you buy your stocks now? Which countries? Like US stocks, China stocks?
Yep. Prior to 2017, I would say I just mainly focus on Singapore stock market.
Okay.
Then in 2017, since I opened out interactive brokerage account, so I have started to invest globally. So mainly like companies in US and also some companies in China.
Oh, and what inspired you to invest beyond Singapore? I had an earlier guest, Edward, where he talks about how most Malaysians tend to only invest locally. What inspired you to go bigger?
I don't really recall like when, why I actually stepped up from Singapore or Malaysia. But I just thought that, okay, you know, with the items that we use on a daily basis, for example, our phones, like the camera that you're using, all these are actually companies that is not in Singapore or in Malaysia. So I started to develop this appetite to, okay, just look around, look globally, and then look for companies that is really, really good, regardless of where they are located, right? So I think these companies that have more growth attributes, these are really good investment. So it's really like look very long term and see where the companies are heading, their outlook, not just looking at the coming quarters, but really towards the next decades, are they still be around or are they will be doing good or not? So I noticed that actually there are many companies that is really outside of Singapore that have all these qualities. That's why my investment since 2017 has been really focusing on these companies.
And Singapore is a relatively small market, population less than 6 million. So it's always good to see what else out there in the world. You have property, you bought your own home in 2017, and you've got stocks, equity, you buy in a few countries. What's a good asset class for new investors?
I would say for new investor, it's not really, maybe don't have to focus on like so many different asset class. For new investor, it's good to focusing on something that you can learn. For example, I think stock equity is or stock investment is a very good place to pick up, because you know, with YouTube and also with internet, with Google's, you can actually just learn as much as you can. So maybe don't focus too much on like how much the returns that you can get, but really focusing on how much you can learn, and then pick up those knowledge that can serve you well.
So equity stocks could be a good starting point. A lot of research out there. It is relatively safe, relatively well regulated. Relatively, it's all relative. Okay, depends on country. We've all heard some interesting things from different countries recently on stocks. And for newbie investors, when they think of portfolio allocation, most of us, we start saving money first. At what point should we start allocating some of our money to investing? Like, should I wait until I have $10,000, $50,000? Do I need to save up 6 months of cash for my, just in case anything happens first?
I think this question really depends on individual, because it really depends on how much commitment that you have. So for example, I have children, I need to take good care of them. I can't just say, okay, all into the stock market and then just lost a lot of money and then just say, okay, somehow not able to feed them, right? So I think it's, as long as there's good amount of emergency monies, let's say like 6 months that is safe, then the rest, right, which is mainly monies that we really invest for retirement, then we can just put into investment that can give us much more growth.
You talk about kids and retirement. These are different life stages. How would your portfolio allocation change throughout your life stages? Back when you were early career, single, newlywed, kids, eventually retirement.
I think for, you know, the standard advice, people say, okay, the allocation should be like 100 minus your age. For example, my age is 35, so I should put in 100 minus 35, 65% into equities. And then the rest should be in like safe assets, for example, like deposit of bonds.
I see.
But then for me personally, I don't think this is good advice, because I mean, for monies that we don't use, let's say for 10, 20 years, right? I would say just put on as much as possible into investment that can give us the most return. And then as long as you have a very big portfolio, you actually already have a safe buffer, right? For example, if I have like 5 millions or 10 millions and I can survive well with just 1 or 2 millions, right, for my retirement, then actually I don't really care so much about the stock market volatility.
That's a fair point. There are many new investors who start, when they think about their portfolio allocation, they use Roboadvisors. They seem to be quite popular, like Stashaway and Dowers. So are Robo-advisors considered like a safe investment? It can be riskier, you can adjust it. What is it?
Robo-advisors, right, is investment services that is provided to customer in a structured or algorithm way. For example, like, okay, you are the customers, you say, okay, I have this appetite, certain appetite, right? Then they will come up with allocations, for example, like, okay, maybe only 50% into stocks, and then the rest are in safe or fixed income investment. So that's how actually they will do the rebalancing for you on a frequent basis. the good part about Roboadvisor is that actually, let's say, just look at the stock investment portions, right? They are mainly invested into ETF. So those itself, right, is actually a very diversified investment. I think this is a good approach, especially for new investors. And you don't really have to do like individual stock investments or individual stock research.
So you mentioned ETF, exchange-traded funds is like a basket of stocks. So what's the difference between buying an ETF and using a robo-advisor?
I think the Roboadvisors, right, is just like one layer on top of the ETF. So underlying the robos, they still put your monies into different type of ETF. It could be like stock ETF, and it could be like fixed income ETF. The difference is actually like, okay, if you just want to focus on ETF, right, you have to really do your own research. For example, like someone who don't know all these topics, they don't know like, okay, should I put like 50% into stocks or 80 or 100%, right? So with this Robo-Advisor, the service that they provided is actually, they will tell you, okay, given that your risk appetite, they will suggest certain portfolio mix for you. So essentially, you are outsourcing the part to the Robo-Advisor.
Got it. Every choice we make, there is risk. How do you think about risk when it comes to investment now?
On the topic of risk, I don't focus so much on the market risk itself because, market is always risky. Like stocks is always volatile, right? If you don't know what you are doing, you are actually putting your capital at risk. I think for people's, right, I mean retail investor like you and me, right, the biggest risk is actually like you don't focus or you don't spend enough time to do the research to figure out like what you are doing. As long as you know what you are doing and during this journey you are learning as much as you can, I would say that over the long times, right, or over the long period of time, there isn't that much of risk by investing into like good investment.
Yeah, and when we think of risk, sometimes we make the mistake of just thinking of risk one way. What if I do this? What's the risk? But we should also consider what's the risk of not doing this? What's the opportunity cost? If I put all my money into a bank, what's going to happen in 30 years? We may actually end up poorer because of inflation in some countries.
Yes, that's true.
Some people feel that investing in growth stocks like Tesla, C Group, Shopee, and also cryptocurrency like Ethereum, Bitcoin is high risk. What's your take?
So for growth stocks, right, I actually think that they are less risky as compared to those companies that is not growing. You see, when there's a company that is growing, right, for sure they are doing some things that is right. That's why their sales is able to grow year over year. The risky part of growth stocks is actually not with the company's fundamentals, but for the valuations. That at least that is the typical case now. Because for stock valuations, right, if you just do a discounted cash flow model just to try to value a company, if you put in a very high growth rate, you actually can end up with a very high valuation for the companies. But we all know that all this growth, right, you cannot take for granted, right? Because the companies may be growing very well, let's say in the past 3 or 5 years, but whether it can continue this growth rate for the next decade or so, nobody knows, right? So for growth companies, let's say if their growth rate actually dies down, that's where you can see that their share price could drop a lot. That's why people always say that, okay, for growth stock, it's very risky. But the fundamental itself, I would say, is much safer because you can, when you look at a company that is growing, you can be even more assured that they will be here for even longer period.
And Boon Tee mentioned longer period. So our time horizons for investing in growth stock is normally in the years, not months, but years. And when we hold on for years, well, the fundamentals can be strong. Sometimes the valuation doesn't change. And what we read in the news and the media can play a part as well in creating fear, uncertainty, or doubt. How do you maintain discipline and focus on the fundamentals even when the headlines say otherwise?
Yeah, I think this one is really not easy because, as an investor, we invest into companies, we usually would just pay attention. But what do we pay attention on a frequent basis, right? It will be like news. We will follow their news, and if there's a bad news, negative news, we will tend to get very stressed out and also like get very worried, right? And somehow usually with all these bad news come out and the stocks will even overreact. Like it could drop 10-20% just because of one news that is very negative, right? But sometimes we just need to like really isolate and ask ourselves whether all these news or let's say the short-term price movement are those really reflecting the company's fundamental or not? So I would say for me, I'll keep telling myself, right, really focusing on the business and not on the share price and not on the news. Because if you really just think from this perspective, right, you will notice that actually 99% of the news or stock price movement is just noise. I'm a very strong advocate of really invest for the long term. So meaning that you actually just buy the stocks and treat it like a business that you want to own for a very long time. So with that, companies grow over the years and you grow together with the companies, right? Yeah.
And let's take a specific example that's top of mind for many people. For the longest time, Chinese tech companies like Alibaba, Tencent have been considered growth stocks. Then there's been a lot of news recently. How has your perception of these Chinese tech companies changed now? Are they still growth stocks to you?
Yep. I think for companies, take Alibaba or Tencent for example, right? If you look at the share price, Alibaba has dropped like 50%. That's crazy, right? From all-time high to now, basically the company is worth like 50% less.
And it's not like Alibaba lost 50% of their customers. People are not stopping to use WeChat just because the valuation drops.
Yes, that's true. So I would say that I can understand that there's this worry about like new regulations that might actually hurt their companies. But this one, we can't just look at the share price and just conclude that, okay, the impact will be huge, right? Because actually nobody knows. Because even for the regulations that have came out or those that will be coming out, still not many people knows what is the new regulations. Because of all this uncertainty, I mean, there will be traders that will just say, okay, let's get out of it and let's wait until the storm has passed, then only we come back again. So that's why I would say, just don't focus too much on the news. So even for the journalists themselves, right, they actually don't know that much also. So I would say just monitor their growth, monitor their revenues, and see whether their business is hugely impacted, right? So that's what I meant by like looking over the long term and over the fundamentals.
Agree. I think stocks are more well understood by many of us. How about crypto?
Crypto, I think I know this is a very hot investment. Many people are really interested with like new investments, right? But I think for crypto, the difficult part is actually the valuation part, because you can justify Bitcoin at 50,000. You can also justify it at 500,000. So it's really hard to pinpoint to say, okay, this is the level, this is the fair values of the cryptos, right? So it really depends on like what others are willing to pay for it. So that actually determine the price.
And I think about tech. Back when the internet companies were growing, then there was a .com boom in 2001 and bust then.
Yep.
But then people didn't stop using tech. People are using it a lot more, just that there was a huge valuation drop after a spike.
Yep.
Where do you see crypto right now? Do you think there's going to be a valuation correction? It's uncertain. There's no precedent to crypto. What's your take?
Yep. For crypto, right? I think for now, or let's say even 5 years, 10 years down the road, right? Crypto will always be a tool for people to speculate. So if you are invested into crypto, you should be have this expectation that the price can actually swing up a lot. It could swing down a lot. But I think for crypto investors, they know about this, because this type of price movement is not like they are stable in the past and suddenly become volatile now, right? Those who invested, they know the story behind it. They know like how they actually work. So they are used to this kind of huge volatility. So actually they are looking for big volatility, right? Because it's only like this investment that can give you like very like 10x kind of returns within short period of time. So I can understand that especially for new investor, they are interested with this kind of investment. But I would say from a portfolio allocation perspective, maybe don't put like 100% into crypto. I would say like 10%, maybe up to 20% are fine. My personal preference is really like put your monies into investment that is actually like generating profit or generating cash flow, be it real estate or stock investment. Those are all good. Crypto is really fun because these are the new investment. We don't have crypto, let's say, more than 12 years ago, right?
Yeah.
So it's always a good place for you to learn, but please don't all in.
And I want to acknowledge that our perspective is coming from one where it's a first world country, we've got a stable government, stable financial system. And many people in El Salvador, Venezuela, Vietnam is one of the world's highest crypto adoption, where for them, crypto is not a speculative asset but almost an insurance against hyperinflation, against government policies and a lot of instability. So I want to acknowledge that there's a range of perspectives. We are speaking from a position of relative comfort. You mentioned growth. How do you balance wealth preservation and wealth growth?
My own preference is really focus more on growth because, you know, we're talking about, like, let's say inflations, right? I would say that first I have to really ask when you say by wealth preservations, what you actually meant, right? Because for me, I will think of like, if you really need this money, you have a pot of money, you need this, let's say, in 1 year time, 3 year times, right? So you actually, the wealth preservation part will be very important. Say, for example, you're saving to buy a house, right? You can't say by the time you want to buy, money is lost in the stock market. So that's really not acceptable. So I would say you will actually focusing a lot more on wealth preservations if you have a commitment that is short term. But let's say for a commitment that is long term, for example, like you really save for retirement, which could be like 10, 20, 30 years down the road, right? Then the growth part, right, will be more important because, you know, we are just like preserving your wealth, right, is not sufficient because, you know, we have inflation. For Singapore, even low inflation of 2% is actually added up over the years, right, over the decades, right? So the growth part is actually important so that you can actually secure a certain lifestyle when you retire. That's why I say really focusing more on growth is really important.
Another way to put wealth preservation is, I think all of us know that if you got $100 today, you're not going to be able to buy the same things $100 today compared to 10 years from now. There is inflation and other factors. And that's what wealth preservation is, to make sure that you still have the same spending power. And normally wealth preservation, to Boon Tee's point, it is money that you may need at any time. You never know. You may not need to use it, but in case you need to use it, it's there. Whereas for wealth growth, you've often heard from me, it's important that we park money that we do not need or we can afford to lose. Otherwise, sometimes we may be forced to make bad decisions. Say like all our wealth is in Chinese tech stocks right now, and we need the money now to pay off our housing loan. Then this is a very bad time. You actually end up losing a lot of your wealth rather than growing your wealth.
That's true. I think that's why portfolio allocation is very important. Whether you are doing stock individual investment or actually doing using robo-advisors, right? I think you have to really have some diversifications. Maybe not to the extent of you have to invest like 100 stocks. I think those are not necessary, but at least spread up your capital in, let's say, a couple of places, so that, let's say, if one part of your investment actually got burned, for your example, like Chinese tech stocks, right? You still have other parts that is doing well. So actually, this is actually what happened to my portfolio recently. I mean, Chinese stocks or Chinese tech stock actually dropped a lot, but the US side is doing well. So my portfolio is still positive this year. So
what's one advice you have for new investors on allocating their portfolio?
My advice is really, like we mentioned just now, right? Really focusing on long term and then focusing on the fundamentals and the business. Take your time to learn as much as you can. Look for resources. I think the one point that is maybe not mentioned enough is really like learn on how to learn. So you can say, okay, now where to look for resources, right? It could be your friends, could be like online. All these actually take time for you to know where to learn or who's the person to ask, let's say, if you have any questions, right? So I think this one, you really need to take your time to have to build a network and then just to pick up the skills of how to study the companies and look at different type of investment and just have the habit of curiosities. Just ask like what are the fundamental questions. Those will actually serve you well.
Boon Tee brought up a big point. Learning to learn. The facts can change rapidly.
Yep.
But if you know how to find information, stay up to date, reassess the reality, reassess the fundamentals, that's going to serve us for the long term. Thank you for that advice. So we hope you found this useful. What's your take on portfolio allocation? What have you learned? Share down in the comments below. And do you have advice for us? We were both learning as well. As Boon Tee mentioned, he's not a 10 out of 10 in finance, even though he works in the financial services industry. I'm not a 10 out of 10 as well. I rate myself. Actually, no one has ever asked me. Ask me.
Yes. How do you rate yourself in terms of financial literacy?
I'm going to give it a 6 out of 10. And here's why. I don't know the most about all financial metrics. Like Boon Tee, you mentioned, I think a story how when you were young, your dad encouraged you to read read the newspapers and understand the stocks, the PE ratios, get a sense of that. I've never had that. I'm more comfortable understanding the fundamentals of a business, like the products and services, than the financial part of it. So I think a different lens in investing. There are many ways to understand and assess the fundamentals. There's financial fundamentals and also operational business fundamentals.
Yep.
I'm more of the latter.
That's good. 6 out of 10.
6 out of 10.
Same.
Yeah,
same.
So slowly growing. So with that, thank you for watching today's episode. If you found this useful, please click the
Like button.
and if you want to stay updated to more episodes,
Click the subscribe button and share to your friends.
thank you for watching. See you in the next one. Bye-bye.
Bye.
Yay! High five.
Wow, not easy leh.
No, not easy.